Do 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 go pack go. Do 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 go pack go. I am a lifelong Green Bay Packers fan. In fact, my name Bart. Well, guess what? I was named after Bart Starr, middle name Vincent, after Vince Lombardi. And no, I'm not from Green Bay. I'm not even from Wisconsin, Northwest Indiana, born and raised. But my father, my Faja, he was a diehard Packers fan and Chicago Cubs fan. So he gave me both of those two storied franchises to be a sports fan of. And my brother just texted me minutes ago and he told me that the Packers schedule has been released, inadvertently released prior to the official release. So this might be helpful for me, okay, for this reason. We try to go to one game a year, doesn't always happen. I'm a fair weather fan, meaning I only like to go in fair weather. I'd rather watch it at home on December 24th or January 6th and not be freezing. So I've got a date targeted already, and it would be week three, September 24th, Saints at Packers. So that would be a noon game for me. So I went over to the Lodge. This is the Lodge Kohler. Here it is right here on the right-hand side of the screen, and that is Lambeau Field right there. So I'm like, hey, I can get a head start, get me a room. And look what they have. Wow, wow, wow. They have nothing currently listed for September ahead of the schedule being released. So they don't release their rooms until the schedule is official. So it is not yet official for the Kohler. They do have some interesting rules, which I know all about, unfortunately, but here we go right here. Home games. Lodging reservations will be available for booking starting at 7 p.m. Central Standard Time on the day of the NFL schedule release. And look at the home game rates. It's $639 per night, but guess what? You have to stay 2 nights minimum. So that has been ongoing now. And the surrounding hotels and motels around there basically use the same coercion when it comes to locking us down on the prices of those rooms. So I told my brother, check your work schedule. Let's see if we can go to that Saints game. I'll probably be going either way, me and Lady Lambo, probably kid 3, and then my brother and his wife, and possibly my nephew, if indeed my brother's work schedule will allow it. So we will see. So that's what I was looking at, but can't do anything about it yet with regard to lodging. And of course, tickets would not be available. But we'll be looking at that. I know you wanted that Green Bay Packers intro. So let me clear that off of the board here. Yeah, let's leave the site and check on the big board here. Let's start with the SPY. It's currently at 411.64. Been really flat, really trading sideways basically all day. S&P down 10, Dow down 225, off of session lows already, which the market opened pretty low. I would say the Dow is down probably about 350 points. NASDAQ in the green a bit, with Google leading the way there, and the Russell 2000 is down along with oil. Oil is down again, 1.35% on the crude oil. So if we look at the watch list over here on the Yahoo, how are we looking? What looks interesting? PayPal in the green. We might pull that off the board just because I don't really. PayPal's a great company. It really is. But it doesn't pay a dividend. I'm trying to hone myself into companies that I want to actually own, preferably dividend paying stocks. So we've got some training wheels on Home Depot. We have, I think, training wheels, possibly put action on Tyson. I know we're taking gas because our strike is $50 on the short leg. Visa, we could take another look. Did I put a trade on Visa? I don't know. Let's find out. I don't think we pulled the trigger on Visa. No, it doesn't appear we have any positions on the Visa. They're still showing them up 1.5% over the last week. Today, they're currently down. If we look at the week, though, let's see. They peaked out here on May 9th and then have made their way down, up, back up, then whoop, roller coaster down, and then trying to fight their way back up. Visa, another great company. I do believe a lot of these really good, air quotes, defensive companies are overpriced right now. Walmart, Johnson & Johnson, McDonald's, Pepsi, Coke, Visa, MasterCard, Procter & Gamble, etc., and so on. But I still doesn't mean I don't want to try to find my way into them. Like Caterpillar taking gas again today. So we have a position on Caterpillar that expires tomorrow, and our short leg is at 207.50. So it's under pressure, but we might put another position on today, expiring next Friday on the Caterpillar. So we will check on that. Walgreens, I've got a 31 strike on a short leg on a credit spread. So it is under intense pressure. That expires tomorrow, so we'll keep an eye on that. I'd be fine owning more Walgreens. I know it's not a growth stock whatsoever, but they are a good company. I know what they do for a living, and they like to pay me a lot of dividends. So we got that going for us. Walmart, we've got a spread on the Walmart that is doing well because Walmart is up today. So looking at the big board on the Robinhood, our Bank of America calls, we got 13 of those. They're almost at full profit, so we'll just let those ride out into the sunset. And then there's our Caterpillar that's currently under pressure. We're still good, but they're showing us minus $100 on that. We are under pressure on the Dow because Dow it's just over 52, I want to say, on their current price, 52.42, down nearly 2% today. Yep. So our short leg at 52 is taking some heat. Devon calls are good. EOG Resources good. Ford call good. Home Depot, it's got a little bit of pressure on it, but it's doing fine. I think Home Depot is what, about 287, 288? It is at 287.42, so it has lost a little bit more ground since we put that trade on, but we're still doing just fine, being that it expires tomorrow. Johnson & Johnson call, good to go. Coca-Cola looks like it's going to need to be rolled again, but it is fighting right now. 63 it's just over 63. It's moved up a little bit more since I've looked at it. 63.51. We don't really want to get rid of the Coca-Cola. We want to keep rolling it, keep grabbing those dividends. Both of these are giving me the bitter bear face right now because they're way underwater. Qualcomm 110s, two of those contracts, and they're currently under 103, so even lower than the last time I looked today, down nearly 2.5% today. Qualcomm, it's a good company. Why are you having such a problem with it? Where was that? Was that Scottish or Irish? I've been watching a show on Apple TV. Me and my late night lady friend, we enjoy watching television every night. I know so many people are like, I don't watch any TV. I like to watch TV. I like to watch a lot of TV, especially when you mix in the Chicago Cubs, the Green Bay Packers, and all the sporting events that I like to watch. Okay, what was I going to pull up? Oh yeah, Alpha. The Alpha. What is Alpha spread saying about the Qualcomm? Let's check the Qualcomm over here, see what their intrinsic value is on this particular company. They're saying they're 35% undervalued. And I'm saying, hey, I'm with you on that. I am with you. So we'll probably do what Brian suggested. We'll probably roll both of those and just collect more dollars. He says he likes to wear out the put side, and he's got a great thesis for that, in that the market is trending down. So you're going to collect more premium rolling on the put side instead of taking assignment and then selling covered calls, because obviously I'd be underwater to begin. If I took assignment at 110, I'd be well underwater on the Qualcomm to begin selling those covered calls. My hesitation was I looked at the Qualcomm and see that they have a ex-dividend date of May 31st. So I thought, that's a good company. I wouldn't mind owning it long term. So why not grab it now, collect a bunch of dividends in the meantime, and begin rolling those covered calls? But am I left as the bag holder while the market continues to go down. So if we look year to date on the Qualcomm, they're down just 3.22%, but 1 year's time, they're down nearly 25%. But I don't really count some of the action that was going on, in 2021, because it was a lot of companies were well overinflated. But if we look at their dividends, what does that tell us? The dividends would be, it's a 301 yield right now with a 320 payout. The next quarterly payment is 80 cents, but they do have a nice steady growth rate. They've paid dividends consistently for 19 consecutive years. 5-year growth rate of 564, low payout ratio of under 30%. The dividend grades are all good. Safety B+, growth A+, dividend yield B+, consistency A. So the problem, if you look at factor grades over here on the right, the revisions, right? Their growth is an F, their momentum is a C-, the revisions is a D. So those are forward looking, right? Those are forward looking, which, gives you a little pause, a little bit of the pause. But if we look at the ex-dividend date of 5/31, if we had those 500 shares, right? If we took assignment 500 times the 80 cents, we would collect $400 on June 22nd in dividends. And then also starting Monday, we would begin to sell those covered calls. So I'll try to do a little bit of a math equation, because I would imagine you're still going to get action if we even sold our covered calls where we're assigned at 110 and 109. If you looked at Qualcomm, if we traded options, went out 1 week, sell call, and let's just see if there's any action at 110. There should be something. Right there. Not a lot. 19 cents on the 110, right? 19 cents on the 110. Okay, and then we would divide it by 8 days and then multiply it by 365. So you'd only be at 7.8% plus the 3% dividend. So you'd be at 10%, which is nothing to sneeze at or to even not appreciate. We appreciate anything above $0 bills. But if you rolled it, okay, if we went to our position and looked at the rolling action, what would be the annualized on that? Can we roll it? We would, in this scenario, we would roll it for the same number. Let's go back to the actual trade. Let's do the 110 because that's the most expensive to close right now. It'd cost me a lot of money. If we had the two contracts on there, it'd be over $1,200 if I wanted to close it and get out of it. If I wanted to roll it, is it even possible to roll it out 1 week and not take gas? So if we go to the 110, it does cover. Okay, so there's our 110. If we clicked through there, we'd have a $20 credit, right? $20 on the credit. So we would be 0.2. So that's officially that's 1 cent more, right? But that's two on both of those. Hold on, let me try to do my math in my head here. So the net credit is actually 10 because there's two of them. So 10 divided by 110 divided by 8 days, divided by 8 days, multiplied by 365. It's 4.1%. I'll have to get out my true abacus, run through that. I'm sorry, Brian, I'm sure you're more correct than I am, but I mentioned to Brian in a response to his comment yesterday, which is I still have my adult career in real estate that is my foundation. And as a longtime landlord, my theory has always been to own, right? You own and then you rent out to people that don't own or can't own or don't want to own. And then you make dollar bills by doing so. So looking at stocks, I kind of have the same mentality, which is if I can own it and it pays dividends and I can sell covered calls, I'm like the landlord of this stock without, plunging toilets. But with the puts, you don't hold any bags either. So there is that advantage, which reminds me, you know, on the put side, that reminds me more of being a real estate agent. I was explaining it to these two young kids that just joined our real estate team, 20 years old, and they've got, you know, the sky's the limit for them as their career. But I was explaining to them that, you know, real estate sales, the reason I've always felt it's one of the greatest small business opportunities in the world is that your risk is almost zero. You know, if we were to start a used car lot, we need to get the property, we need a little building to work out of, then we need inventory, the cars to sell, right? All of that costs a lot of money to do so. In real estate sales, as a real estate agent, the seller holds the risk because they're basically coughing up their house as the asset. And then we're paid a nice amount of money to be the advisor and to facilitate and accommodate those transactions. So that's a lot of long talking. You're talking about the Packers, you're talking about real estate. Get back to the stocks. So that's my thinking on stocks. I don't know if, you know, my subconscious could ever allow me to think otherwise, but you know, it is a good company. Do you want to own a company that's really good, that has a great consistent dividend pay? I don't know if it's on sale. Is it on sale? Let's look at the history. If you used dividend yield theory, right, what would it be? So their 4-year average on their dividend is 2.37, which according to dividend yield theory, now that it's at 301, says that the stock is undervalued. Undervalued. There's another little thing. What is it called? Simply Safe. No, right here. Simply Investing Platform. Let's see. Yeah. Well, we'll get back to that. I will go back to that. I don't want to keep you much longer on this video because I'm just talking and talking about a lot of nothing. But I just wanted to give a live look in as to what I like to look at in the morning. This is no prep, obviously. Open it up, look around, see what's happening. I'll go to the bar chart, look around there. I do have a lot of positions that are open, and I want to be able to have some sort of a management thought process regarding those going forward. I want to look at a dividend thesis, you know, big picture. Essentially, if I consider the training wheels a bit of a dollar cost average into some companies that I want to own long term anyways. So I wanted to run some numbers on Johnson and Johnson because I've got one position, I would call it, because I only have 100 shares. Of course, they're up a little bit from when I was looking at them before, but my position is like 162 and change on Johnson and Johnson, right? So why wouldn't I put a training wheel on right now, knowing that that short leg is going to be well under my current average, which I was fine owning at 162.70, even though I know it's still a high price and a bit overvalued. But if Johnson and Johnson is a safe company, and now that they've spun off their consumer portion that is now called Kenvue, do they have a bigger growth upside to their company going forward? Those are things that I have been thinking about. So, you know, I want to own Coke, I want to own Pepsi, I want to own Walmart and Target, Johnson and Johnson, Procter and Gamble, McDonald's, Visa, Caterpillar, Deere, all of those companies that we know what they do. They've been doing it for a long time. They would be considered defensive. They're all high priced right now. Is there at price points that I would consider attractive to me? You know, and if I'm dollar cost averaging by using the training wheels, right? So using the training wheels to start a trade. So say this expires at full profit, then good, I'm good to go, right? But say Caterpillar comes down and dips to that 207.50. What is my synopsis for that? Is that a number that I'm willing to accept Caterpillar at? And right now the answer is yes. But as it gets more pressure, does that still remain to be, you know, the idea that I would take it at 207.50, if that makes sense, because I can sell off that 202.50, put just a few bucks into my pocket. Like right here, it would be $13 times 4. So that's, you know, 60, carry the 1. So that's $52, right? So that's $52 more than I would have otherwise. Because if this breaks through my strike price, then I begin to take gas on this trade where I collected $124 right here. But if I want to own Caterpillar at 207.50, then I could sell off that long leg, remove the safety net, remove the bomb shelter, take assignment, or even just roll it. If it gets down to 207.50, then as Brian would say, you can just wear that put side out, roll it on down the hill, even out and down, and continue to chase a lower price, a better value on companies that you would want to own anyway. So hopefully some of that of what I'm saying and thinking is making sense or is even righteous. But that's my thought process is beginning today. Today is Thursday, May 11th, 2023. It's currently 11:13 a.m. on the Swatch Watch Central Standard Time. Let's check on the SPY. Still just rolling along sideways, which means that our call credit spreads on the SPY are doing very nice, still doing very nice. So we will check on those. I'm sure we'll have another position that we'll put on at the end of the day, because if SPY continues to go sideways and sideways and sideways, then those trades will just rake, of course, until they don't. So we got to keep an eye on all of that as well. So that's where we have it. Letting you go on this video. Make sure you subscribe, like, comment, share. And if you, again, just slow down for 1 second and look on your YouTube screen. Are you indeed a subscriber? Are you? You should just subscribe. There's nothing wrong with it. Just click the button. Click the notification bell. You don't want to miss out on any of this. This is entertainment, not for investment purposes or advice. Entertainment only. And we're best friends. Stocks, options, dividends. See you in the next video.